Bitcoin whales have been driving price all year long. Now, when we talk about whales, we're specifically talking about accounts that have at least $50 million. And what we can see is that since the beginning of the year, the whales have been responsible for driving the price up from 30,000 to 64,000. They've been responsible for that selling pressure from 64 down to 30. And they've also been driving the recovery back up to about $50,000 or so. And so we've got a whole bunch of charts that we're going to pull up here. But first, we've got a quote from Naeem Aslam, I believe is how you pronounce it. I'm probably saying that wrong. I apologize. Which is the whales activity has been linked to price movement since the beginning of 2021. These investors were the driving force behind the rally seen in February. They were the driving force behind the price drop in March and April when they sold off their holdings to gain returns at peak prices. The beauty of Bitcoin is that everything is on a public ledger. We can see the movement of Bitcoin. We can see who holds what. We can see when they bought it. There is so much data here. I personally believe that the on-chain analytics is going to become the most important data in all of finance, and it's there for free for anyone to look at. And so other places you will not see the coverage of the on-chain analytics of Bitcoin like you're going to see here. First, before we get to on-chain analytics though, let's look at some of the charts that we have. We've got Bitcoin whale buying going on. This Bitcoin whale buying is large investors' holdings versus the Bitcoin price. You can see that since the end of 2020, pretty much when the price goes up, the whales buy. When the price goes down, the whales sell. It's not that difficult to break it down, but still having the data is important. Then we outsourced the Bitcoin or the Best Business Show research team. We outsourced a little bit to CNBC. They were kind enough to put together this for our research team. And the percent change in Bitcoin price over the 28-day moving average, you can see that that volatility is still not that crazy, right? If you look at the actual volatility of this thing, the percent change in Bitcoin price on a 28-day moving average is within a band of plus or minus 2%. Not really that crazy. Then if we go and we look at the filtered charts for 1,000 to 100,000 Bitcoin, this is specifically coming from Glassnode. It's looking at the people who have 1,000 to 100,000 Bitcoin overlaid with the price. And you can see that as they gain more and more Bitcoin in those wallets, the price goes up. As whales buy, price goes up. As whales sell, price goes down. Now, the reason why we're telling you this is because in the last 48 hours, the young wizard, Will Clemente, he sent out a little note. He basically called attention to something that's very interesting. We've been talking about this Bitcoin supply squeeze. Now, the Bitcoin supply squeeze thesis is essentially the idea that there are 70% of Bitcoin that have not moved in the last 6 months. If you account for lost coins, 80% of Bitcoin has not moved. And so when you start to think about the fact that of the circulating supply, 70 or 80% is being held by these strong hands, they are not willing to sell. And as we get increasing demand, like the 1.2 million people, the most on record, that joined the Bitcoin network in July of 2021, the price should continue to appreciate. That's what's happened. We went from $30,000 to $50,000. Pretty incredible. But over the last couple of days, we've seen that there are more Bitcoin moving onto exchanges. Over the last few weeks, we had seen the Bitcoin moving off of exchanges. So this gold line here, you can see that as they came off, as it drops, that means that people are taking Bitcoin off exchanges. As people take Bitcoin off exchanges, it means that they are not on the exchange to sell into the market. So it is a signal that people are saying, I've bought Bitcoin, I'm going to take it off into cold storage, and I'm going to hold it there. There's a strong hand component to doing that. As we saw a very big drop in that Bitcoin on exchange, we saw price rise. Now we're starting to see a little uptick over the last couple of days. And that's what Will called out yesterday, is the fact that as the number of Bitcoin on exchanges ticks up, we have to be careful that we do not see a drop in price. Now that could be a short-term drop, simply people taking some sort of profits, but it also could have long-term implications. I'm not selling my Bitcoin. I don't think my brothers are selling their Bitcoin, but I do think that it's worth paying attention. Again, in the traditional world, we would have to wait for quarterly reports to know who is buying and selling what. The beauty of the on-chain metrics is that they don't lie. We know pretty much instantaneously or very, very close, kind of near real time, exactly who is doing what. And that is why I believe that the transparent ledger that is provided by the Bitcoin network is going to ultimately end up being the standard when it comes to value transfer globally. Now, while all of this is occurring, we have to remember that Bitcoin operates within a macro environment. So the micro environment of Bitcoin, we can look at on-chain metrics, we can look at all sorts of data in terms of holders, what they're buying, selling, how much, where, etc. But we cannot lose sight of the macro environment. If you go back to March of 2020, it didn't matter what the on-chain metrics were saying about Bitcoin. The macro environment was that there was a global pandemic and it led to a financial crisis or a recession where there was a liquidity crisis and all asset prices sold off. The macro environment actually ended up superseding the micro environment of Bitcoin. The reason why I call that out is although we do see more Bitcoin moving onto exchanges, at the same time, yesterday we hit the all-time high for the percent of households and nonprofit organizations, directly and indirectly, holding corporate equities as a percentage of financial assets. That's right. This is all the way to Q1 2021, but we are now over 40%. 40% of US households and nonprofit organizations, directly or indirectly, hold corporate equities. Pretty nuts. 40% of their financial assets. That number is wild. And so that is the macro situation, is that we are getting continued manipulation of markets. We're seeing interest rates stay low persistently. We're seeing high rates of inflation. People are running to things like stocks or cryptocurrency. They're looking for some sort of safe haven. And so as we see people continue to invest, we have to continue to watch the on-chain metrics of Bitcoin, and it should tell us with some level of accuracy where the price likely is to go in the short term. Over the long term, I remain incredibly bullish because Bitcoin is the best global store of value over the last decade, and I think that will only continue moving into the future. What's up, guys? Bang, bang. Thanks so much for watching The Best Business Show today. If we're going to be the best business show, we obviously need the best partner. That's why the exclusive sponsor of The Best Business Show is SoFi. They're an all-in-one platform that allows you to invest in all kinds of different assets, including stocks, ETFs, crypto, IPOs, and they even have an automated investing function, if that's your thing. So before we start getting after it again, make sure that you go download SoFi, you get an invest account, and when you make your first crypto trade, regardless of what you buy, they'll give you $10 in Bitcoin for free. It's that simple. Head on over to SoFi.com/pomp to get started today. Thanks so much for watching, and I hope that you come back and watch more of The Best Business Show tomorrow.